We're joined by Naresh Jalan, who's the MD of Ramakrishna Forgings. Hello, Mr. Jalan. Thank you so much for joining us. Now, remember, as far as the impact and size is concerned, India accounts for just 3% of the $97 billion worth of auto component imports by the US, but the US accounts for 27% of the auto components exports made from India. Let's find out how is this likely to impact the auto and companies. And Mr. Jalan, first up, my question is that, earlier you had guided that there will be no impact of the additional 25% punitive tariffs because it falls under the standard global tariffs and no as far as, it only applies to the non-auto forging. So how much of a tariff impact are you likely to see for the auto component exports and the non-auto forgings?
So non-auto forgings will come back to 18% for oil and gas and industrial equipments. But auto tariffs, which fall under chapters 232, I think whatever we have heard post this deal announcement from our customers till today morning is that India has been given or is supposed to get an exemption from chapter section 232 in terms of auto components, and that will also be coming under 18%. So we will need to wait for the fine prints to emerge in a couple of days. But I think probably as Japan and Korea have got that, India is also supposed to get that. And if that happens, from 25%, auto component is going to move to 18%. Industrials and oil and gas sectors have already moved from 50% to 18%.
All right, that's indeed a good number to start with. Mr. Jalan, morning. This is Shrishti also joining in. Thank you so much for that clarification. But why don't you also tell us that how this bifurcation and the new rates are going to impact you and the business?
Good morning, Shrishti. I think overall, we had seen a lot of downtick in demand in the previous year. And I think probably from this quarter onwards, we are seeing an uptick in demand in the US market. Because of the subdued demand, our exports to North America had considerably fallen down in last 9 months. But probably we will see this quarter onwards, North America exports to pick up. And I think this icing on the cake is going to be this duty reduction, if at all it happens. Overall, in terms of RKFL's performance, I think we are going to grow double digit in terms of exports in financial year FY27 in terms of North America with the addition of new customers, which we have already had. But probably, I think with this happening, we are expecting further up boost in terms of overall prospects of RKFL doing better in North America going forward.
Mr. Jalan, like you mentioned, like in the last few quarters, the demand has been rather subdued and muted. What could be perhaps the demand projections for the next few quarters, given that now we have a relief coming in as far as tariffs are concerned?
No, I don't think it is anything to be done with the tariff. I think overall in North America, if you see the build rates of the OEMs were pretty down in last 9 months. Probably the entire calendar year of 25 has gone with a lower build rate in the heavy duty trucks and the medium duty trucks. Probably from this quarter onwards, we are already seeing there is an uptake in terms of the warehouse pickups from the OEMs over there. And probably this is going to continue, and the momentum, the way it is building up right now, we probably see that the calendar year 24 demand is going to be back by June quarter onwards for us as well as the North America market.
All right, that's good to know. But along with that, Mr. Jalan, one of the other recent FTAs that has been signed was with respect to the European markets. If you can just give us some sense that how do you see this whole trade deal? I know that you don't have a significant exposure in this market, but from an industry standpoint of view, how do you see this particular deal opening up the doors for the ancillary players like you?
No, Ashish, I think probably we are doing extremely well in Europe, and then this FTA with Europe is going to give a significant boost to the overall cost competitiveness of industries from India in the European OEMs. We were paying right now in built-up cost of close to around 5.5% duty, which I think going forward post this implementation of FTA, that duty is going to get offset, and probably we are going to become more competitive vis-a-vis our competitors in the European OEMs, which will attract more businesses going forward. The RFQ flows and other things being consistent, we were still uncompetitive compared to other other geographies. But I think with this duty reduction, which is going to happen in the auto component sector, the domestic industry from India is going to gain immensely in the European market.
All right, Mr. Jalan, on that note, thank you so much for joining us
Thank you very
and
much.
answering all the questions on the trade deal that's gone through. Ramakrishna Forgings, as of now, trading with gains of upwards of 10%. And that's how the mood of the market is right now, cheering the deal that's come through. But with that, it's time for us to slip into a short break. Don't go anywhere. Post the break, we're getting more managements and see the impact of this trade deal. Let's take a break first.